Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Extra Space Storage Inc. quarterly report. Extra Space Storage Inc. provides a variety of businesses and services to its customers. These include self-administered and self-managed REIT, Real Estate Investment Trust, storage units for personal, boat, RV, and business, use secure storage facilities across the country, conveniently located stores in 43 states and Washington, D.C. The company operates under the Extra Space brand and is the largest operator of self-storage properties in the United States. The stock price of Extra Space Storage Inc., EXR, has dropped by over 14.7% in the past year due to several factors. A significant contributor was the Q2 2025 earnings report, where the company missed its core funds from operations, FFO, per share estimate, and reported a decline in same-store net operating income, NOI. The Q3 2025 earnings report also showed a decrease in net income and same-store revenue, leading to investor concerns. Additionally, broader economic factors such as economic uncertainty and potential interest rate changes by the Federal Reserve have added to the company's performance risks. These factors have contributed to the stock consistently trading below its 200-day moving average since mid-December 2024, indicating a bearish trend. The primary drivers of revenue growth for a company are multifaceted and can be attributed to various factors. The main contributors to revenue growth include property rental revenue, tenant reinsurance revenue, management fees and other income, and interest income. Specifically, acquisitions completed in 2024 and the first 9 months of 2025 have driven property rental revenue growth. Additionally, an increase in the number of stores operated has led to higher tenant reinsurance revenue. On the other hand, revenue decline can be attributed to several factors, including a decrease in occupancy and or rental income at certain stores, lease-up stage stores not meeting original projections, held-for-sale stores, and impairment of investments in unconsolidated real estate entities. These factors have resulted in a decline in revenue for the company. It is worth noting that same-store rental revenues have remained relatively stable, with minimal growth over the past year. However, this stability does not necessarily indicate a lack of growth opportunities, as other areas such as property rental revenue and tenant reinsurance revenue continue to drive growth. Net income and profit margins experienced fluctuations between Q3 2024 and Q3 2025, as well as YTD 2024 and YTD 2025. In Q3 2025, net income decreased by $28,912, or 14.2%, while the net income margin dropped from 24.6% to 20.3%. However, for the year-to-date YTD period, net income increased by $99,243, or 15.9%, with a corresponding rise in the net income margin from 25.5% to 28.7%. The decrease in Q3 2025 may be attributed to changes in revenue and cost of goods sold, as well as operating expenses, although these reasons are not explicitly stated. In contrast, the YTD increase suggests that the company's overall performance improved during this period. Profit margins also varied by segment. Self-storage operations saw a decline from 70.3% in 2024 to 67.9% in 2025, while tenant reinsurance experienced an increase from 77.7% to 80.6%. These changes indicate that the company's performance differed across its various business segments. The company's financial performance indicates a positive trend in its operating cash flow. The data from multiple pages confirms that the company has been generating positive operating cash flow in both years, 2024 and 2025. Specifically, the net cash provided by operating activities for the 9 months ended September 30, 2025 was $1,482,396, demonstrating a significant amount of liquidity generated from its core operations. This suggests that the company is capable of meeting its short-term financial obligations, indicating a stable financial position. The company's debt level has experienced significant changes over the past year. Initially, total debt increased by $31,637, net of secured notes payable, and later by a substantial $1,334,850. By September 30, 2025, the debt level had reached approximately $13.2 billion. This indicates a notable increase in debt, Regarding interest expenses, there have been fluctuations but no significant change in the combined weighted average interest rate of 4.4%. However, interest expense did increase by plus 6.3% for the 9 months and by $25,302 compared to the previous year. Non-cash interest expense related to amortization of discount on unsecured senior notes also increased from $11,005 in 2024 to $12,086 in 2025. The financial performance of the company's segments varied in 2025 compared to the previous year. On a positive note, tenant reinsurance saw an increase in both revenue and net operating income, with revenue rising by $14,525 and net operating income increasing by $18,329. However, self-storage operations experienced a decline in net operating income, decreasing by $11,287. These results indicate that while some segments of the company are performing well, others require attention to improve their financial performance. Management is optimistic about the company's future, with plans to expand through acquisitions and originate significant bridge loans. They aim to adjust rental rates in response to economic changes using industry-leading technology. The company expects to generate positive cash flow from operations in 2025, which will be used to fund operating expenses, debt payments, and capital expenditures. Management also intends to maintain the company's credit ratings by managing its balance sheet and may repurchase debt or shares depending on market conditions. The company has made several significant acquisitions and divestitures in recent years. Acquisitions include the purchase of 25 stores for $261,778, scheduled to close in 2025, as well as 13 properties located in Arizona, Nevada, and Utah for $118,250. Additionally, the company acquired 58 wholly owned stores in 2024 and another 46 stores during the 9 months ended September 30, 2025. On the other hand, the company has also made divestitures, including the sale of properties with no specific details provided and the disposal of 12 previously held for sale stores. The company has a history of paying consistent dividends to its shareholders. For the past 2 years, the dividend payout has remained steady at $1.62 per quarter and $4.86 for the 9-month period. The total amount paid out in 2025 was $1,031,930, while in 2024 it was $1,031,044. This demonstrates a commitment to returning value to shareholders through regular dividend payments. Concerns about inventory buildup and supply chain disruption exist. The company's financial summary highlights concerns regarding inventory buildup or supply chain disruption, particularly within its real estate operations. The data indicates a loss on real estate assets held for sale, increasing from $63,620 in 2024 to $70,231 in 2025. Additionally, the proceeds from selling these assets have decreased significantly, from $441,415 in 2024 to $168,747 in 2025. These statistics suggest potential issues with inventory management and supply chain efficiency within the real estate sector of the company. That concludes the financial summary for Extra Space Storage Inc. Feel free to comment below, and I will be happy to answer them when possible.